Hello, good morning. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. On my left is, as usual, Karthik Malhotra. Also joining us on the show is Kranti Bhatini, who's a markets expert. I want to quickly begin with markets first. Markets opening in red, Sensex down by about 200 points. All of this on the back of MPC, perhaps?
Looks like, Shweta. So all indices pretty much, except for the small caps, you look at the Sensex, you look at the Nifty, Nifty Bank, Nifty IT, everything is giving a very, very deep red in the markets today. I think what we are seeing right now is perhaps a little bit of profit booking on account of awaiting the RBI MPC and retail investors there, and even institutional investors for that matter, looking at booking some profits in perhaps, if not hope, then in anticipation of maybe a little bit of a rate hike again, which seems unlikely because from what we've read and understood so far, RBI is likely to continue with its pause.
All right. In fact, RBI Governor Shaktikanta Das has just started speaking. Let's cut to that.
Okay.
Non-performing assets and rising profitability. Corporate balance sheets are robust with lower leverage, improving debt servicing capacity and strong profitability. Lower current account deficit and ample capital flows have imparted strength to our external sector. The resultant accretion to foreign exchange reserves has provided a buffer against external shocks. Overall, India's strong macroeconomic fundamentals have laid the foundations for sustainable growth. In a moment like this, we need to continue with our efforts to maintain macro-financial stability while pushing our growth frontier further. India is uniquely placed to benefit from the ongoing transformational shifts in the global economy in the wake of geopolitical realignments and technological innovations. A large economy marching ahead with vast domestic demand, untapped resources and demographic advantages, India can become the new growth engine for the world. In this background, the Monetary Policy Committee met on 8th, 9th and 10th of August. After detailed deliberation on all relevant aspects, the Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6%, 6.5%. It's 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. Let me now explain the MPC's rationale for these decisions on the policy rate and the stance. Headline inflation, after reaching a low of 4.3% in May 2023, rose in June and is expected to surge during July-August, led by vegetable prices. While the vegetable price shock may reverse quickly, possible El Nino weather conditions along with global food prices need to be watched closely against the backdrop of a skewed southwest monsoon so far. These developments warrant a heightened vigil on the evolving inflation trajectory. The cumulative rate hike of 250 basis points undertaken by the MPC so far is working its way into the economy. Nevertheless, domestic economic activity is holding up well and is likely to retain its momentum despite weak external demand. Considering this confluence of factors, the MPC decided to remain watchful and evaluate the emerging situation. Consequently, the MPC decided to keep the policy repo rate unchanged at 6.5% with preparedness to act should the situation so warrant. The MPC remains resolute in its commitment to align inflation to the 4% target and anchoring of inflation expectations. Further, with monetary transmission still underway, and I have given some details in the footnote of my statement with regard to this, when I say monetary policy transmission is still underway, there are some additional information given in the footnote. Those of you who are interested may have a look at it. Further, with monetary transmission still underway and headline inflation remaining higher than the 4% target, the MPC decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. I would now like to provide our assessment of the growth and inflation scenario. First, I would like to take up global growth. The global economy continues to face daunting challenges of elevated inflation, high levels of debt, tight and volatile financial conditions, continuing geopolitical tensions, fragmentations, and extreme weather conditions. Belying earlier apprehensions, a number of economies have demonstrated remarkable resilience, and the grim prospects of hard landing appear to have receded. Nevertheless, global growth is likely to remain low by historical standards in the current year and also in the next few years. Despite upward revision in the global growth forecast for 2023 by the International Monetary Fund. World merchandise trade volume growth is projected by the WTO to decelerate from 2.7% in 2022 to 1.7% in 2023. Headline inflation is easing unevenly across countries and remains above the target in major economies. While the pace of monetary tightening has been scaled down, policy rates could stay higher for longer. Financial markets, which had been buoyed by expectations of an early end to the cycle of monetary tightening, have turned volatile with sizable two-way movements in response to recent rating events and incoming data. Turning to global growth, these external factors are likely to impinge on the growth prospects of most advanced and emerging economies. India is, however, expected to withstand these external headwinds far better than many other countries. The momentum of overall economic activity in India continues to be positive. On the supply side, crop sowing has picked up with steady progress in the southwest monsoon. The temporal and spatial distribution of monsoon has, however, been uneven. Industrial activity is holding ground, as is evident from the latest data on Index of Industrial Production, that is IIP, Core Industries Output, and Purchasing Managers Index, that is PMI for manufacturing. Buoyant services activity is reflected in healthy expansion in e-way bills, toll collections, railway freight, and a sharp jump in services PMI. On the other hand, commercial vehicle sales and domestic air cargo traffic
All right, we seem to have lost the source of that press conference. Very important, takeaways that are coming. The MPC has decided to keep repo rate, Karthik, unchanged at 6.7%, similar sort of 6.5%, similar commentary to what was coming from the last MPC. That is, India remains resilient to global headwinds. Global growth is likely to remain low in current year. We're going to correct that spelling very, very shortly. Headline inflation remains above the target in major economy. Policy rates could stay higher for longer. Buoyant services, buoyant and sharp jump in services PMI, all of that indicative of the fact that
he was also referring to the fact that the auto sales are reflecting a healthy output when it comes to manufacturing as well.
Right.
So broadly, I think what I'm taking away from this, Shweta, is that the governor of the RBI, Shaktikanta Das, is obviously seized of the external factors which are spoiling the global growth party, and there is going to be a likely impact of those factors even on emerging markets. But I think the takeaway from what he's saying is that India continues to be buoyant. India continues to be a little more steadfast in standing up to those global external factors, and those headwinds are unlikely to impact India in the same magnitude as it would impact the rest of the world.
Let's quickly also get in Kranti, who continues to be with us. I'm told, Kranti, how are the markets reacting? Policy stance unchanged, rate unchanged. This should calm some jitters.
Yeah, definitely, Shweta. Market has been swinging in between red and green. As market has been waiting for the growth prospects. As one good news is the MPC unanimously approved to maintain the status quo, and also targeting the inflation the range of 4%, and also giving the approach of act to with preparedness. In case if the inflation looks stubborn, they are going to change their stance in the coming days. That's a very welcoming move from the MPC, and giving the more prospects to the growth. As I have to remind everyone, Shaktikant Das, the central bank governor, he is from the North Block. He was in the Ministry of Finance earlier. He was the principal secretary. So he understands the economy very well, how the growth prospects, what the economy needs, and what the entire growth needs. So he understands in a better way than his predecessors. So he always gives the importance to growth, and that's what the MPC unanimously taken a stance with respect to maintaining a status quo with respect to the rates, holding the rates, and waiting on to the inflation, and giving more emphasis towards the growth. So markets are swinging in between red and green right now at this point of time, but it's a positive move with respect to markets are concerned.
RBI Governor Shaktikanta Das had also mentioned just now, and you would have heard it as well, that there are these external factors which are likely to dampen the spirit of growth overall across the world. And it will obviously have an impact on emerging markets as well. But he feels that India is better poised to deal with those headwinds. Is that the sentiment when it comes to foreign institutional investors also? Because we've seen them also exiting the Indian market recently.
What we witnessed in the market from from the month of March, we have risen around 15% from March lows. Nifty is concerned, and also we received around $15 billion of inflows into the Indian markets in starting from March. So the money flow has been very strong. So 1-2 days we can take the exception, some kind of hot money, ETF money can be exiting on profits. So there is no imminent concern with respect to the 1-2 days sell-off of foreign portfolio investors. So far we received around $15 billion, one of the best inflows in terms of the emerging market flows are concerned. So there might be 1-2 days exceptions, but the flows can be continued, and also the DIS support also there for the markets at this point of time. So when FIs were selling, DIS have become the net buyers. So there is a neutrality. That's the reason markets are holding nicely at this range, maintaining 19,500 ranges at this point of time.
So with the inflation unlikely to taper off, and while the RBI is still saying, and Shaktikanta Das himself mentioned that the MPC is committed to hammer down inflation to 4%, despite that the rates have remained unchanged. Now compare this to the rest of the world. Let's say developed markets like the US are not ruling out multiple rate hikes. Now as a result of that, and I'm sticking to the FII question, are we going to continue seeing FII outflow into the US bond market?
Definitely, but we need to wait and watch, because the Federal Reserve Open Market Committee, they have a stance, as they are mentioning indirectly, there might be a couple of rate hikes going ahead. But we need to wait and watch how the things are and the dynamics of the economy is going to change. One thing we need to mention is the Federal Reserve Open Market Committee commentary, if you have to see. Once they said the inflation is transitory, for more time, and they mentioned that inflation is sticky, and the feelers that comes from the Federal Reserve is completely uneven. And if you see the notes of the Federal Reserve Governor, the experts at Federal FOMC and the economists at FOMC, they failed to predict the inflation. That's what the quotes that comes from FOMC minutes. So we need to wait and watch how exactly all the things are going to pan out. But one thing to ponder, one thing to mention is U.S. economy is going strength to strength, and it is going at a strong note. So coming to the Indian markets.
Are you saying Indian economy, or are you saying U.S. economy? Just to clarify.
I'm telling the U.S. economy also.
Okay.
U.S. economy also. The data, as per the data, U.S. economy looks quite strong. And coming to India, okay, we are quite strong and quite resilient. That's where the FII flows going to attract the Indian markets, and also the recent MSCI changes giving high weightage to Indian markets, reducing China. That's also going to add some kind of incremental flows towards Indian markets. So Indian markets are quite resilient at this point of time, despite of the global worries.
Okay, I just, before we move on, I quickly want to also ask you to weigh in on inflation. Inflation remains a cause of concern. Governor pointing out there that headline inflation is uneven across the country. El Nino is going to be a dampener. There's been a skewed southwest monsoon. All of that, of course, weighing on vegetable prices at the moment. How do you see inflation panning out? Do you see it easing any time, since the commentary is that July and September are likely to witness higher inflation, as opposed to June or May?
Shweta, in the beginning of the month of June, there was a deficit of monsoon, and all the SkyMet and other agencies have expected that monsoon going to be a deficit monsoon, and it is going to dampen the entire sowing cycle. But contrary to the view, we are at a excess monsoon. We received excess rainfall in majority of the food basket states. So what we can expect is there is a impact of rise of food prices, because in the consumer pricing, the food prices plays a majority of the role. Tomato is playing a majority of the role on a lighter note. So what we need to expect is next few weeks is crucial. Next month is crucial, just to see how the food inflation is going to what the pace is going to go up, or it's going to control. So it is completely I can say it is premature to predict or speculate with respect to the food inflation is concerned. What we can expect is we can expect a moderation in terms of the food prices. That is the reason the RBI MPC want to have a stance with respect to wait and watch approach at this point of time.
All right.
You also mentioned China, Kranti, and I want to come to, since we are talking about, of course, domestic inflation, food inflation specifically, but China cannot be left out of the equation when we talk about external factors that may impact the mood across the world. Now, we've seen China has finally slipped into deflation. It's not unexpected. People were anticipating this to happen, and it's finally gone into a scenario called disinflation. Now, what do you read into China's recovery, and how's that going to weigh into India?
Karthik, you mentioned absolutely correct. Okay, if the China is in a sinking sand, that definitely will have an impact in the global sentiment of the market. But on a longer term perspective, when China is getting into deflationary kind of prospects, it will help the Indian economy on a longer term prospects. Overall, the market global sentiment can be weak, okay, as if with respect to the global growth is concerned. It will have a short term impact, but not on the longer term note.
Okay, and exports almost at an all-time low from China at about down about 14.5% or so, and even imports reducing. We are talking about a disinflation kind of a scenario. So there is absolutely no demand. There is no sort of factory output being consumed by the market in China. Now, number one, of course, the Chinese central bank will have to look at a rate cut, which they have done already. But there is also commentary about China lowering taxes. Now, a lower tax regime in China, could it take out investments from India in the China plus one scenario? Could it then become India minus one, and all the investments which are coming into India going back into China for a favorable tax environment and lower rates?
Or may I just add to that, is it going to be the opposite as a result of, disinflation, as a result of lower factory output? Are we going to see more FIIs coming from China to India? So which of the two scenarios do you see playing out in the near term?
Yeah, Karthik, you nailed it. But just to mention, the hot money can move anytime, either ways. The hot money in across the financial markets, but the long only money is chasing India. Okay, but there might be a short-term impact with respect to the monetary policy changes and short-term growth prospects. But whereas the long only money is committed towards Indian markets, when we interact with many FIIs, okay, they are committed towards investing in India for long only because of the policy visibility in India is concerned, the growth prospects in India is concerned, and macroeconomic data in India is concerned. It gives more headroom in India and also more visibility in India. So that is the reason India can be remained favorite for the long only money, but the short money can move here and there with respect to the growth prospects in the medium to short term.
Also, let's quickly talk about Amphi data which came out yesterday. It's indicating a higher mop-up as far as SIP is concerned, approximately at an all-time high, come to think of it,
so
at 15,000 crores.
So, yeah, 15,000 crores inflow by way of SIPs of retail investors into mutual funds in the month of July. 15,000 crore rupees in one single month, which incidentally was the total annual inflow in the year 2014. Okay. Less than, about 9 years ago. The annual inflow was 14,500 crore rupees, and in the month of July alone, we've seen an inflow of 15,000 crore rupees. Now, an interesting trend which is emerging from there, Shweta, and maybe, Kranti can shed some light on it as well, is the fact that we've seen profit booking in large cap equity funds. And large cap equity funds have seen outflows of 1,880 crore rupees as compared to small cap funds, which have seen an increase of, those numbers are going to come now, but we've seen an increase in small cap funds of about 4,000 crore rupees or so. So 33 lakh investors are presently in the mutual fund SIP route right now. And we've seen since COVID, and ever since the slight recovery of COVID started happening in the month of September 2020, we've seen a month-on-month increase in both the number of retail participants as well as the total size of the investment corpus. And that over time has built up to a situation that we have actually received inflows of 15,000 crore rupees on account of at least a third of that coming from small cap funds and selling happening in large cap funds. Okay,
let's understand from Kranti why that is happening. Kranti?
Yeah, one thing is, Shweta, whenever the markets are on a higher note and when there is a sustained resilience in the market, the flows can be on a higher note. And one thing we need to keep in mind is right now, because of the financial education platforms like you are providing right now, and also the digitalization that's taking place in India, just through mobile app, people can invest in, start investing in equity markets, either in a direct way or indirect way like mutual funds. So the awareness is going up, and rural participation is going up. When we interact with people in tier 2, even in fact with the villages also, people are started investing in equities. Farmers not much aware about the organized sector. They started investing in equities for a longer term basis. So the tempo is completely changing. As Karthik rightly mentioned, the 15,000 crores earlier we used to receive in a year. Right now it's coming month. We are just starting of the scratching stage. My analysis says, Shweta. So there is a long way to go, and the flows can be expected to be on a higher note in the coming days, both sometimes what happening is whenever there is a dip in the mutual fund flows, but the direct equity flows have been going up. So the digitalization is helping people to get awareness, and people don't have a hesitation to invest in direct equity at this point of time. This is the reason we can see the upward nature in the equity market flows, thanks to the platforms like you who are educating the investors.
Not at all. It's all thanks to experts like you, Kranti, who are helping us take this message to investors, not just retail investors, but I think even the foreign institutional investors. Hearing you speak, I think they will get a little more bullish on the India markets.
And the household savers,
Of course.
I mean, because they contribute to a large chunk of mutual funds in the country. And from the data that I was reading yesterday, it is people sitting in tier 2, tier 3 city that are contributing to that 15,000 crore rupees. So an increased awareness, education for financialization of savings, for small time savers who were savings perhaps in their kitchens and in their households, are
under
now
their pillows,
under
in their drawers, locked.
And they're now investing, even albeit a very small amount, but they are investing in SIPs.
I think even the entire ecosystem of AMCs, of mutual fund managers, asset managers, they have also made it simple for you to invest with as low as, I've been told, even 100 rupees. Earlier, I think it was 500 rupees, but I think there are certain funds which now let you do SIPs or buy mutual funds for as little as 100 rupees. So I think, yes, financialization of savings is definitely a trend which has been in the making for the last at least 3 to 4 years, with a little dip in COVID. But after that, I think it has continued that journey. But I think the only thing that competes with SIP investments when it comes to investing in equity markets, now Kranti was saying that retail investors, often shy away from buying stocks directly, unless it is an IPO. And IPO sees a lot of traction from retail investors, and they really want to try and get lucky to get a pie of, one lot, at least some allotment of IPO shares.
Right.
And I think that rule is also now getting a little better.
Absolutely. So a change there from T plus 6 days to T plus 3 days essentially means that between listing and the last date of IPOs, there'll just be 3 days that will be made available to a company to start listing their shares.
So when your IPO closes, right, and you receive interest from investors and you receive their money, you list in 3 days. Whoever gets allotted shares receives those shares in 3 days, and for those who have not been that lucky and have not been allotted shares, they get their money back in 3 days.
So that's the latest change.
So that is the new norm, which is likely to set in, has to set in mandatorily from the 1st of December voluntarily from the 1st of September, as per RBI Chair Madhvi Puri Buch. Now, this has been halved from T plus 6 earlier. It would take 6 days for a company to list and 6 days for shares to be allocated or for money to be refunded. That has now come down to 3 days. And there's a very interesting quote from Madhvi Puri Buch, and if we can pull that out, she's put it really, really interestingly. And she says that issuers get their money, and those who don't get allotted receive their money back at the end of the day. So at the end of the day, it is, she says that time is money. So this move saves both time and money. So I think it also appears that it's a first in the world of sorts. In fact, that's what I read in some of the papers this morning, that Madhvi Puri Buch is saying that this is actually a global first. And according to what I understood, it's unlikely that a T plus 3 listing formula exists anywhere else in the world.
And I think it's a win-win for both the company as well as investors.
Absolutely.
And so perhaps I'm hoping with this, perhaps there'll be more traction towards IPOs. We don't know that yet.
I don't know. Kranti, help us understand this. How does this, pan out? Because what investors could, or potential investors could likely do, is that if they have been unlucky in being allocated shares of one particular company during an IPO cycle, the same money comes back to them quicker, and they can use the same money to try and invest in another IPO.
Yeah, absolutely. And also, it gives the interest to them. Karthik, just to refresh our memories, we are coming from a long way. There was a time in the secondary market where we had a T plus 15 day cycle. When we buy a stock, it will be coming to the demat after 15 days. Now we came up with a long way. We are at a T plus 2 to currently at T plus 1, which is the dynamic system, and soon we are getting into, as per the commentary of recent SEBI board meet and the press notes of the SEBI chairperson, it mentioned that we are getting into a so dynamic world that is going to be T. So there is a lot of development in terms of our equity markets are concerned. It's a long way to go. So Indian markets are one of the best regulated market across the globe and so dynamic market with the systems. So coming to the point, the current IPO now, the current measures that taken, it will help the investors. Right now, the money, earlier the money used to be debited from the investors' demat account when they apply for a IPO. Right now, it is a ASBA. It is the money will be blocked in their account. Now, the unfreezing of the money, unblocking of the money, it's so dynamic that help the investors to use the money for other investments. And we have somewhere around 29 companies are lined up to raise money, around 30,000 crores from the market in the coming days. There are some noteworthy IPOs are lined up, like Tata Technologies. There are many IPOs are lined up. So we are going to witness a dynamic, and we are going to witness a more busy IPO primary market going ahead.
But is this T plus 3 actually a global first, Kranti, or do we have such precedences in other parts of the world as well?
But currently, we are in first. We are in first in terms of that using the technologies and making a user-friendly kind of investor-friendly kind of prospects in India.
Okay. So looks like it's a global first so far, and T being the final day of the listing of the IPO. So within 3 days, perhaps a company is likely to list. Could be a global first. Thanks very much, Kranti, for joining. But before I let you go, Kranti, actually, let's also quickly understand the companies that are going to announce their quarterly earnings today, from Pidilite, Apollo Tyres, lots of them.
Let's get those numbers up on the screen, and maybe Kranti could also refer to these. And these, of course, are prices at 9:35 a.m. just when the markets opened this morning. We are already an hour into it, and after the RBI's announcement, I think these numbers could have changed. But yeah, some of the big companies up for their Q1 earnings today, Kranti: Apollo Tyres, Biocon, Container Corporation of India, Avanti Foods, Balaji Telefilms, Hero Motocorp, which again has been attracting the ire of tax authorities now, not just the ED. We've got Mazagon Dock, Pidilite, Sale, Spencer Retail. Any of these on your watch list, and any certain expectations that you'd like to share with our audiences here, Kranti?
Yeah, I just pick up quickly stock like Mazagon Dockcat. The stock is a multiplayer which is into defense and manufacturing of ships and submarines. The stock has witnessed a tremendous rally. It is a 5-bagger in last 5-6 quarters. So the results has to meet the expectation, and also order book and management guidance is essential. While coming to stocks like Biocon, we are witnessing a complete resilience with respect to pharma sector is concerned. We can expect a positive commentary from Biocon. Yesterday, pharma Nifty index went up to almost all high in the recent past. We can expect Avanti Foods because the shrimp business is going through a lot of turbulence. So we can expect the numbers can be moderated with respect to Avanti Food is concerned. Pidilite, because of the it's a highly priced in stock. We can expect positive commentary and positive results from Pidilite due to the stabilization in the global crude oil prices, and also the domestic home decoration and also the home inventory is concerned. It's doing well. So Pidilite can meet the expectations.
Okay. And markets right now seem to not have taken very kindly to Shaktikanta Das keeping the repo rate policy rate unchanged. In fact, markets have fallen about 420 points on the BSE Sensex, and the Nifty also not looking good, down about 124 points or so. What are you reading into this sudden selling in the markets, Kranti?
It might be related to the growth, the commentary that made with respect to the governor. So some kind of profit booking we are witnessing. We have, because the status quo is already discounted in the market. Okay, there is a consensus view in the market that it's not the MPC is not going to increase the interest rates. So that has been already discounted. So we are witnessing some kind of profit booking. Having said that, Nifty has risen more than 15% from the March lows. That might trigger the selling at this point of time.
All right. Okay. In fact, massive selling there. Sensex down by as much as 40 points, 0.69%. Nifty down by 126 points, hovering between 126 to 129 points, down by approximately 0.64%. Not reacting very kindly to the MPC announcement to keep repo rate unchanged at 6.5%. We will, of course, keep bringing you those details, but let's quickly shift focus to a story we've been tracking since yesterday, and that is by the way of the Ayushman Bharat. I will have to let you go, Kranti. Thanks very much. We'll get you back very, very shortly. But Thank
you, Kranti. Very interesting inputs from you, and I think a very important day that you happened to join us and we were able to cut live to RBI Governor Shaktikanta Das. So thank you so much for being with us.
Thanks, Karthik. Always my pleasure to share my views with you.
Thank you. See you soon again.
Thank you.
Yes, Shweta.
Story that we've been tracking since yesterday, that has come by the way of Ayushman Bharat and the irregularities that were reported in Ayushman Bharat by the way of that CAG report. Let's quickly run our viewers through what these irregularities are, but I think what stood out for you and me both were lakhs of people registered under same number, and that number happens to be 10 times 9.
Yeah, I think it's a travesty of numbers if you ask me, Shweta. So, of course, the headline there is that 7.5 lakh beneficiary accounts are linked to one single mobile number, and that is 99999999999. But that's not all. You also have about 1285 beneficiaries who have registered their Aadhaar number as 0000. 00000000.
I lost count of the number of zeros.
What are we supposed to make of this? Yeah. Now add to that, I mean, the travesty of numbers doesn't end there. You've got almost 43,000 odd households which are saying that their family size is between 11 and 50. Up to 50 members in a single family availing of the Ayushman Bharat scheme, which gives them 5 lakh rupees of health insurance coverage. But out of those, there are 12 households, not out of those, in fact, in addition to those, there are 12 households which say that their family sizes are between 100 to 200 members. I mean, this is beyond travesty. I think
small village, perhaps.
Yeah, so I think what we are really looking at here is maybe corruption might be too strong a word right now, but definitely lapses, irregularities, glitches in the system, or bypassing of the system by using these crooked means of entering any random mobile number. And let's look at the other data also that in fact we showed our audiences yesterday, but let's run through that as well, because there have been instances where you've got about 88,000 odd people who have died during availing the Ayushman Bharat for treatment, availing that insurance scheme for treatment. They actually happen to die during that treatment, but the same 88,000, in fact, add more number of it to it. So those same 88,000 people have availed insurance 2,12,000 odd times after they have died during their treatment. And that, of course, becomes a very, very scathing sort of audit by the CAG. And this audit, incidentally, was done between 2018 and 2021. So this data is actually old. It's coming out 2 years later. And God alone knows how many more such cases we would have added in the last 2 years. So it was obviously, one of the most revered, most talked about insurance schemes anywhere in the world. The idea of the insurance scheme of Ayushman Bharat, the Prime Minister, Pradhan Mantri Jan Arogya Yojana, PMJAY as it was referred to, the idea was to actually be able to provide insurance of up to 5 lakh rupees per family, targeted towards the below poverty line segment of society. And there has been gross misuse, misappropriation, and just very, very unfair usage of the taxpayers' money, which is funding such insurance schemes. And look at the means by which people have availed of of this insurance scheme, when in certain cases the patients have died in treatment, and yet those beneficiary accounts continue to avail the 5 lakh rupee insurance cover even years after a patient has availed of that cover and died. So the same beneficiary accounts, the same numbers linked to bogus mobile numbers, bogus Aadhaar numbers are continuing to be misused.
Continue to be misused to the point that it is a government scheme that is bleeding at the moment, misappropriation of funds, as I would like to call it. I don't know if you'd like to correct me there, but the money is going somewhere. We don't know where, we don't know to whom.
Absolutely.
Because that has not been found out just as yet. But corruption there, if it's at state level, whether it's at the center level, all of that needs to be clarified further. But I think it's an important story that deserves some more scrutiny. The CAG report is out, it's tabled in the parliament, but we don't know what happens from here on.
I'm sure there is going to be an investigation from here on. There should definitely be an investigation, and perhaps 2 days after this report was tabled in parliament, perhaps today when the Prime Minister speaks in the lower house, he should take some accountability of this report and stand up to say at least that yes, if nothing else, at least an inquiry, an unbiased, objective inquiry will be made not just into this scheme, but into every scheme that has been launched by the government over the last 9 years. And we are talking about an election year. It is imperative for the government to take accountability for such lapses, and there has to be very squarely pointed accountability, whether it rests at the technology end, whether it rests with state governments, or whether it rests with the center. But the fact that this is a Prime Minister's scheme, it is a Pradhan, Mantri, Jan Arogya Yojana. I think the Prime Minister in Parliament should stand up and take accountability for at least investigating and getting bodies to investigate this very objectively.
No, we don't know whether that's going to happen, but remember, this is a scheme that was launched by the Prime Minister in 2018. The data pertains to time period between 2018 to 21. We don't know about data from 22-23 just as yet. As many as 7.5 lakh beneficiaries seem to be registered under a same number that is 10 times 9. All of this being pointed out by CAG, which is a government auditor, not a private auditor. So credible there, a government agency pointing to discrepancies in the database of Ayushman Bharat scheme, and particularly Ayushman Bharat Pradhan Mantri Jan Arogya Yojana. But moving on. And my colleague Amit Ranjan, who continues to be here with us in the studio. Amit, a story that you're bringing to fore, and that is by the way of social media influencers. We now know that they're supposed to be acting more responsibly because they're not going to be treated as just social media influencers anymore. If you have a certain number of people who subscribe to you, who like you, who are viewing you on a daily basis, you are a celebrity.
Yeah, so
and therefore have responsibility.
So the definition has been broadened by the ASCI, the Advertising Standards Council of India. So anybody who has 50,000 followers, 500,000 followers, and earns more than 40 lakhs, half a million, and earns more than 40 lakhs a year, now gets celebrity status, which basically adds more responsibility to him or her, that every time they are taking on a brand endorsements, they have to adhere to certain rules. So that is broadly what has happened, what the ASCI has done right now. There were lapses in people who were taking on endorsements, and that happens all the time. And just to curb that and bring these people, make these people also responsible, because they are exerting influence. 500,000 is quite a big number, even though it's a small number considering the population of India.
Come to think of it, not very big number.
But maybe at least in social media followings, this is the minimum number. We know people, influencers are in multi-millions also, number of followers they have. So they have just added, they have been given some responsibility now, and that can be challenged in court if they don't adhere to it.
And that responsibility is important, critical, because they are now endorsing a variety of products, of services. We talked about Finfluencer on this show, where a lot of influencers are not so objectively trying to endorse a certain financial service, a route, an SIP perhaps, but all of that, of course, SEBI took note of that. But apart from that, generic things, products that we use on a daily basis, things we eat, things we consume, all of that is now being endorsed not by biggies who can be held accountable, but by social media influencers.
Not just that, Shweta,
with maybe perhaps 500,000 and less number of following.
So there's another scam of sorts also going on in the world, and this was something reported by the New York Times about 2 days back, An Indian origin gentleman, I don't know if I can call him a gentleman, by the name of Roy Singham,
Yes.
a US-based entrepreneur, has relocated to China, and his key responsibility right now is to get Indian influencers down to China and get them to record videos about the great infrastructure in China, the great tourism opportunities in China, and also the fact that, hey, the Chinese economy is doing great and there is no COVID, there is no lockdown, there is no problem, the factories are doing great. So Roy Singham's modus operandi is to get Indian influencers down to China and get them, and this again according to the New York Times report, get them to paint a very rosy picture about China for their followers back in India. Now this also obviously becomes something of national interest if we are talking about an enemy state like China and Indian influencers really praising that country for their audiences back in India. If it's done objectively, no problem. If they're paid for it, obviously it is advertising. Now the challenge with the guidelines or the norms issued time and again by ASCI is that these continue to be only guidelines. There is no enforcement. Now, what does celebrity status really do for these influencers? They need to be more responsible. I mean, they need to treat every endorsement more responsibly. What happens if they don't?
What happens
They have
if
a
they
little
don't?
bit of, they have a system of blacklisting celebrities. That ASCI does have.
ASCI in its
so
own...
It's a
it does
toothless
not-
body.
It's a
Yeah,
toothless
but
body.
They
And
have influence within the community of endorsements,
Okay.
endorsers.
Okay.
So within brands, because ASCI caters to or influences advertising agencies, which are in direct cahoots
I think
with
it warrants
brands.
that we discuss this further perhaps at 4 p.m. today. If not today,
4
maybe
PM is not going to happen. Prime Minister is
maybe
speaking in Lok Sabha
tomorrow.
at 4
Maybe
PM
tomorrow.
today.
But gentlemen, we've run out of time. Thanks very much for watching us here on Newsline.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it.
It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. Streaming now.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more. Streaming on world's first news